AT&T has long been a favorite of retail investors for its solid dividend yield and track record of annual dividend increases. However, the company continues to add debt while earnings per share are expected to remain relatively stagnant. AT&T's big bets on Time Warner and DirecTV leave the company with few options if things don't go according to plan. While the dividend is covered for the short term, stagnant earnings per share, rising debt costs, and potential shareholder dilution may put pressure on the dividend payout. So what's going to happen to AT&T stock with the third quarter earnings coming soon? Let's take a look. We're looking at the 20-year monthly chart on AT&T, and the symbol is T. For disclosure purposes, I do not own any shares of AT&T at this time. And further, I have not conducted any fundamental analysis on AT&T. So my opinion is based strictly on the charts. Looking at the charts, we got down to about $30 a share here in, say, mid 2018, came off of that, and we're currently at 32.87. We had a high, relative high speaking, back in 2016 at under $45 a share, and so we've been declining for about 2 years more or less. Moving down into the MACD, we can see that the fast line is just starting to try to curve and make an attempt toward that slow line. Looking at prior history, such as in here and such as in here, it took the fast line several months before it moved through the slow line. So I think we have a few months for the fast line to move up and through the slow line if all goes well with their third quarter earnings coming up shortly. Looking here at the histogram, you can see that we're still a ways away from moving through that zero line and on up. That's basically the same as the MAC. And then here we have the price rate of change. Now the fast line has moved through the slow line, but is it going to stay up there, or is it going to sawtooth down such as we saw here where it moved up and then down and then finally back on up again? Did a lot of sawtoothing during this period here. So it is easily or possible, very possible for this to move back down again. But it's a bottoming process so far. Relative strength looks fine, bottom and a move up. Stochastics as well. Looks like the fast line moved through the slow line. However, things can change, such as the sawtoothing we saw in this period and certainly in this period here. Moving through. The volume is a red flag, being that there is so much red. No pun intended. Moving on down here to the Williams, we bottomed in late 2017 and then again in early 2018, and we've moved off of the base there. So that looks good. Moving on back up here. All right, so what it looks like is that the bottoming process is taking place. However, when you're near a relative low, that's when a stock is most vulnerable. So if there are any negative comments that come out during the conference call, it can hurt the stock. The comment may be undeserved, but investors tend to shoot first and ask questions later in these sort of characteristic periods when a stock is near its low. Just think back to General Electric. It took a long time for it to hit bottom because media pundits continued to come out with negative information. Whether it was deserved or not is another question. So at these points in time, the stock is going to be very vulnerable, so make sure that you conduct your fundamental analysis. But based on what I see, it looks like AT&T is trying to bottom. We will see soon enough if it's successful. So for today, that's ChewDog Charts. Thank you.